Workers at a Georgia Hyundai plant describe a chaotic scene after an immigration raid at the facility. Federal authorities say Thursday's raid was the result of a months-long investigation by several agencies. The crackdown, the largest so far on U.S. work sites, led to 475 arrests of mostly Korean nationals.
What if I told you that in just 1 week, America managed to push away two of its most crucial allies? Not through military action, not through diplomatic disputes, but through a series of decisions so reckless that they're now threatening the very foundation of American economic power. You're about to discover how a single immigration raid in Georgia didn't just detain foreign workers, it triggered the largest shift in global trade relationships since the end of the Cold War. While headlines focused on deportation numbers, something far more dangerous was happening behind the scenes. America's closest trading partners were quietly building an economic future that doesn't include the United States. The Georgia incident that shook Asia. Picture this, September 4th, 2025. While Americans were starting their day with morning coffee, ICE agents were conducting what would become the most economically destructive immigration raid in modern history. But here's what the news didn't tell you. Those 316 individuals weren't just random workers. They were South Korean engineers, technicians, and specialists working on cutting-edge battery technology that could have positioned America as the global leader in clean energy.
We have some more breaking news to touch on this Sunday. According to the Associated Press, more than 300 South Korean workers who were detained following a massive immigration raid at a Hyundai plant in Georgia will be released and brought home.
Now, imagine if the roles were reversed. What if Chinese authorities raided a Tesla facility in Shanghai and paraded 300 American engineers through the streets in handcuffs? The international outrage would be immediate and severe. Yet that's exactly what happened to our closest Asian ally, and the world was watching. The reaction in Seoul was swift and brutal. Korean newspapers didn't mince words, calling it a prisoner of war scenario and questioning America's stability as a reliable partner. But here's the part that should terrify every American investor and worker. This wasn't just a diplomatic embarrassment. It was economic suicide. While Washington was dealing with the Korean crisis, something unprecedented was happening in Canada. For the first time in decades, our northern neighbor was systematically reducing its economic dependence on the United States. The numbers are staggering. Canadian exports to America dropped from 78% to 68% of total trade in just 12 months. That might not sound dramatic, but think about what it means. Billions of dollars that previously flowed into American markets are now heading to Asia, Europe, and other regions. Canada isn't just diversifying its trade, it's actively building economic relationships that bypass the United States entirely. Prime Minister Mark Carney orchestrated this shift with surgical precision. The Trans Mountain Pipeline expansion now sends 900,000 barrels of oil daily to Pacific ports, directly supplying Asian markets that were previously dependent on American distribution networks. For decades, the U.S. controlled Canadian energy exports. Today, that stranglehold has been broken. What we're witnessing goes beyond trade disputes or immigration policy. This is the systematic destruction of American soft power, the ability to influence global events through attraction rather than coercion. Consider the recent situation in Brazil, where America threatened military intervention to defend a convicted coup plotter's rights in a foreign country. Allies look at this behavior and see a superpower that has lost its strategic thinking. The contrast with Canada's approach is striking. While America threatens and alienates, Canada is building strategic partnerships. Carney has implemented policies that leverage Canada's natural resources for both economic gain and environmental progress. Companies wanting access to Canadian energy must invest in carbon capture technology, turning resource extraction into a tool for modernization. This isn't just smart policy, it's the kind of forward-thinking leadership that America once exemplified. Today, other nations are filling that leadership vacuum, while America focuses on tariffs and deportations. Remember the Trans-Pacific Partnership? The trade agreement that was supposed to create the largest free trade zone in history? America withdrew, but the partnership didn't die. It evolved. Asian economies are now integrating at an unprecedented pace, creating supply chains and financial networks that deliberately exclude the United States. South Korea and Japan recently signed a currency swap agreement, allowing them to trade without using dollars. Canada is pricing energy deals in euros and yen. These might seem like technical financial arrangements, but they represent something much more significant: the systematic replacement of American economic infrastructure. For 80 years, the dollar's status as the world's reserve currency gave America enormous economic advantages. We could print money with fewer consequences because the entire global economy depended on our currency. That era is ending, not through military defeat or natural disaster, but through self-inflicted diplomatic wounds. The human cost of these policies is already visible in American communities. Last month alone, 58,000 manufacturing jobs disappeared. These aren't just statistics. They represent families, communities, and entire regions that built their futures around American industrial strength. Meanwhile, the foreign expertise that could revitalize American manufacturing is being systematically expelled. The Korean engineers who understood advanced battery technology, the Canadian energy specialists who could help transition to clean power. They're all heading home or to other countries where their skills are valued rather than criminalized. This creates a vicious cycle. As talent leaves, innovation follows. As innovation moves elsewhere, investment capital shifts to support it. Eventually, entire industries migrate to locations where they can operate without political interference or sudden policy reversals. What's emerging isn't just a bad period in American foreign relations. It's a fundamental restructuring of the global economy. For the first time since World War II, major economic powers are actively building systems designed to function without American participation. Asian economies are creating their own payment networks, their own supply chains, their own technological standards. Canada is positioning itself as a bridge between American markets and Asian growth, but increasingly as an independent player rather than a junior partner. European nations are hedging their economic bets, reducing dependence on both American consumers and American financial systems. This isn't happening because these countries want to challenge America. It's happening because they no longer trust America to be a reliable partner. When your closest allies start building alternatives to your economic leadership, you're not just losing influence, you're becoming irrelevant. Here's the brutal reality. Empires don't usually collapse through external conquest. They collapse through internal dysfunction that drives away their allies. Rome fell when it could no longer maintain the relationships that sustained its power. Britain's empire crumbled when colonies found better alternatives to British partnerships. America is following the same pattern. The very countries that built their prosperity alongside American growth are now building their futures despite American policies. When allies become competitors and partners become obstacles, the mathematics of power shifts dramatically. Consider what happens when the world's major economies no longer need American approval for their trade relationships. The dollar weakens. American consumers pay more for imported goods. American companies lose access to global supply chains. Workers lose jobs as factories relocate to more stable environments. How other allies are following suit. What's happening with Canada and South Korea isn't happening in isolation. It's part of a much larger pattern that's spreading across America's traditional alliance network. Take Germany, for instance. For decades, Germany relied on American security guarantees while building one of the world's strongest economies. Today, German companies are quietly shifting their supply chains away from American components, citing reliability concerns. Japanese firms are following the same playbook. Toyota, Honda, and Nissan are moving their most advanced manufacturing operations closer to Asian markets, reducing their dependence on American consumers and American suppliers. This isn't just about cost savings, it's about risk management. When your largest market becomes unpredictable, smart businesses diversify. But here's where it gets really concerning for American workers. These companies aren't just moving production, they're moving their research and development centers too. The innovation that once happened in Detroit, Silicon Valley, and Research Triangle Park is now happening in Seoul, Toronto, and Munich. That means the high-paying jobs of the future aren't just leaving America, they're being designed and created elsewhere. The investment capital flight. Follow the money, and you'll see the real scope of this crisis. Global investment flows tell a story that political speeches can't hide. In 2023, foreign direct investment in the United States dropped by 32%. Meanwhile, investment in Canada increased by 18%, and investment in South Korean technology sectors jumped by 41%. These aren't random fluctuations. They're calculated decisions by pension funds, sovereign wealth funds, and multinational corporations that see America as increasingly risky. When you're managing billions of dollars, political stability isn't just nice to have, it's essential. And America's recent track record of sudden policy reversals, trade war escalations, and diplomatic disasters makes it a poor choice for long-term investments. The Norwegian Sovereign Wealth Fund, one of the world's largest investors, recently reduced its American holdings by $47 billion, while increasing positions in Canadian energy and Asian technology companies. The fund's managers didn't make public statements about politics. They simply moved money to more stable, predictable markets. This creates a feedback loop that accelerates American decline. As investment capital leaves, American companies have less access to funding for expansion and innovation. As they fall behind technologically, they become less attractive to global customers. As they lose market share, they employ fewer Americans. The spiral continues downward while other countries benefit from the capital and expertise flowing out of the United States. The technology transfer revolution. Here's something that should terrify every American technology worker. The brain drain isn't just about foreign nationals leaving, it's about American experts following opportunity wherever it leads. Silicon Valley engineers are accepting positions in Toronto, Vancouver, and Seoul at unprecedented rates. Why? Because that's where the interesting work is happening now. Canada's AI research programs are attracting talent from Google, Apple, and Microsoft. South Korean companies are offering stock options and research budgets that make American opportunities look stagnant. When America's best and brightest start looking elsewhere for career growth, you know the foundation of technological leadership is cracking. The numbers are stark. American universities granted 47,000 engineering PhDs last year, but only 31,000 of those graduates took positions with American companies. The rest? They're building the future for America's competitors, using the education American taxpayers funded to strengthen foreign economies. This isn't just about individual career choices. It's about the systematic transfer of American technological advantages to countries that appreciate and nurture innovation. When your education system produces world-class talent, but your political system drives that talent away, you're essentially subsidizing your own decline. While Washington focuses on trade deficits and manufacturing jobs, a much more fundamental shift is happening in global finance. The dollar's dominance as the world's reserve currency has been the cornerstone of American economic power for 80 years. That dominance is now under systematic assault, not from military action, but from practical alternatives. China and Russia made headlines with their yuan-ruble trading arrangements, but they're not the only countries moving away from dollar transactions. Brazil and Argentina are trading in their own currencies. India and Japan have established rupee-yen exchange mechanisms. Even traditional allies like Australia and New Zealand are pricing commodity trades in their own dollars rather than American ones. Each of these arrangements might seem small individually, but collectively, they represent the construction of a parallel financial system that operates independently of American monetary policy. When countries can trade, invest, and save without using dollars, America loses a massive economic advantage. Think about what this means practically. For decades, America could run budget deficits and trade deficits because the rest of the world needed dollars to conduct international business. Foreign governments bought American treasury bonds not because they were the best investment, but because they needed dollar reserves to participate in global commerce. As that need diminishes, America's ability to finance its government spending through foreign borrowing decreases. Interest rates rise, budget constraints tighten, and the economic flexibility that allowed America to respond to crises disappears. This isn't a distant threat. It's happening right now, one bilateral trade agreement at a time. The 5-year timeline, a complete economic transformation. Based on current trends, we're looking at a completely transformed global economy within 5 years. Not Chinese-dominated, not European-controlled, but truly multipolar. A complex network of regional partnerships where America is just one player among many, and no longer the most important one. The Korean engineers who were detained are now home, sharing their experiences and warning their government about the risks of depending on American partnerships. Canadian oil that once flowed south is now heading west to Asian buyers who pay on time and don't threaten suppliers with sudden tariff increases. But here's what makes this transformation irreversible. Success breeds success. As these new trade relationships prove profitable and stable, they expand. Canadian energy companies are investing in Asian distribution networks. Korean technology firms are establishing research partnerships with European universities. Japanese manufacturers are building supply chains that bypass American components entirely. These aren't just economic adjustments. They're the building blocks of a world order that functions without American leadership. And once these new relationships are established, they become self-reinforcing. Success breeds more cooperation. Cooperation builds more trust, and trust creates lasting partnerships that survive political changes and economic fluctuations. While America was focused on bilateral trade deals and tariff threats, something much more significant was happening: the creation of integrated regional economies that don't need American participation. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, now includes 11 countries representing 13.4% of global GDP. America isn't among them. The Regional Comprehensive Economic Partnership, RCEP, connects 15 Asian countries in the world's largest free trade agreement. It covers 30% of global GDP and 30% of the world's population. Again, America is excluded, not because it was blocked, but because it chose not to participate. These aren't just trade agreements. They're the infrastructure of a new global economy. They establish common standards, shared supply chains, and integrated financial systems that reduce dependence on American markets and American rules. When a Korean company wants to sell technology to a Vietnamese manufacturer, they can do it entirely within RCEP frameworks, using RCEP standards, and settling payments through RCEP financial mechanisms. The efficiency gains are enormous. Companies inside these networks can move goods, services, capital, and people with minimal friction. Companies outside these networks face additional costs, delays, and uncertainties. Over time, businesses naturally gravitate toward the more efficient systems, leaving less efficient ones, like American-centered trade networks, with declining market share. The point of no return. The most disturbing aspect of this situation isn't the economic damage, it's the apparent lack of awareness among American policymakers about what's happening. While Washington debates immigration raids and tariff policies, the fundamental structure of global commerce is shifting away from American control. This isn't a temporary setback that can be fixed with better diplomacy or smarter trade policies. These are structural changes that reflect deep concerns about American reliability, stability, and long-term thinking. When your allies start building alternatives to your leadership, they're not planning to come back when your policies change. They're planning to move forward without you. The question isn't whether America can recover from this diplomatic catastrophe. The question is whether American leaders will recognize what they've lost before the transformation becomes irreversible. Every day that passes with these destructive policies in place makes it harder to rebuild the trust and partnerships that sustained American prosperity for generations. Canada's energy strategy reveals just how thoroughly American policymakers misunderstand the modern global economy. While Washington debates drilling permits and pipeline routes, Ottawa is positioning Canada as the world's most reliable energy supplier. The difference isn't just about oil and gas, it's about the entire energy transition that's reshaping industrial competitiveness. Canada's critical mineral strategy is particularly brilliant. They've identified 31 minerals essential for renewable energy technology, electric vehicle batteries, and advanced manufacturing. Instead of simply exporting these raw materials like a developing country, Canada is requiring value-added processing before export. Companies that want Canadian lithium, cobalt, or rare earth elements must establish processing facilities in Canada, creating high-paying jobs and technological expertise. This strategy accomplishes three things simultaneously. It secures Canada's position in the clean energy supply chain, it creates domestic employment in high-tech industries, and it reduces the world's dependence on Chinese mineral processing. American companies that need these materials must now choose between Chinese suppliers with political strings attached or Canadian suppliers who demand real investment in Canadian communities. The contrast with American energy policy is stark. While Canada builds long-term relationships with energy buyers worldwide, America threatens allies with export controls and sanctions. While Canada invests in processing and refining capabilities, America exports raw materials and imports finished products. While Canada positions itself as a reliable partner for the energy transition, America fights political battles about whether the transition should happen at all. The result is predictable. Global energy buyers are diversifying away from American suppliers and toward more stable, forward-thinking partners. This isn't just bad for American energy companies. It's a strategic disaster for American foreign policy, which has relied on energy exports as a tool of international influence for decades. Consider what's happened in just the past 6 months. Canada has signed comprehensive trade agreements with 3 Asian countries, established energy export partnerships with 2 European nations, and created technology transfer programs with 4 different trading partners. Each of these relationships reduces Canada's dependence on American markets, while strengthening Canada's position in non-American economic networks. South Korea has accelerated its participation in Asian trade agreements, expanded technology partnerships with European companies, and established currency swap arrangements with 6 different countries. These aren't reactions to American policies. They're proactive steps to build economic resilience that doesn't depend on American stability. Meanwhile, American trade relationships have deteriorated with 7 different allies. American companies have lost market access in 12 countries due to retaliatory tariffs, and American exports have declined to 23 different markets because of political disputes. This isn't just bad diplomacy, it's economic self-destruction on a scale that's hard to comprehend. The world is changing faster than most people realize. The countries quietly replacing American leadership aren't distant rivals. They're our closest neighbors and oldest allies. And they're not waiting for America to figure out what it wants to be when it grows up. What do you think? Which ally will be next to reduce its dependence on American markets? And how long before these changes become permanent? Let me know in the comments, and don't forget to subscribe for more analysis on how global power is shifting right before our eyes. The transformation is happening right now. One trade relationship at a time, one investment decision at a time, one brilliant engineer at a time. The question isn't whether America can stop this process. It's whether America will recognize what it's losing before the point of no return becomes the point of no going back.